Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, remember that the benchmark indices just managed to save the blushes by snapping the 4 days of losses. But looking at the levels, it did seem as if the markets barely traded yesterday. It was a very narrow 130 point of range and it did showcase the perfect bulls versus bears battle on the street at the start of the September F&O series expiry week. Now, what could today's trading session be like? We'll tell you all, but first up the top headlines we're tracking for you this hour. Indian shares are likely to consolidate with a strong buying bias on Tuesday as overseas cues appear positive after a sustained sell-off. Auto stocks and PSU companies will continue to remain the top most attractive bets as traders punt on low ticket sizes and inexpensive valuations. Very good morning to all our viewers and good morning to you, Shail, as well. Well, like I was pointing out, there was plenty of action on the stock-specific activity that we were discussing all through yesterday, but the Nifty really remained range-bound. What do the key levels suggest for the traders today?
Good morning, Sakshi, and good morning to all our wonderful viewers who are watching us on this excellent Tuesday morning. As you would know, the weather in Delhi has changed for the better. And so it seems that sentiment on Dalal Street is also improving, Sakshi. From a very weakish Nifty all of last week, we've seen the trend shifting from negative back to neutral and now to positive. I'll tell you what has happened. As you very rightly said, it would seem that the Nifty did not move anything at all yesterday, and it was, an event which would be best forgotten. But what has happened is that after a slide of about, 550 points, the daily chart will show you a candle that has been formed in which the open and the close are nearly the same, which basically means that there is some sort of parity as far as the bulls and the bears are concerned, and that's also visible in the advance decline ratio of the Nifty, a perfect 1:1. 25 shares advancing and 25 shares on the back foot. So that basically means that the equilibrium that is there in the market is now again back on the Nifty after a 550-600 point slide, and it's the 50 EMA that is likely to provide support. What's also happening, Sakshi, is that a couple of sectors are helping the Nifty now stabilize at these levels, which is 19,670, 19,650, 19,600 levels. And it is these sectors which are providing support. The first and foremost, of course, is the auto space. We've discussed this in great detail over the last 1 week or so, but auto is providing support to the Nifty simply because of the kind of support that we are seeing as far as monthly sales are concerned. It's the festive month, it's the season for festivities, and therefore a lot of people are buying this. Apart from auto, it's the cement pack which is creating a lot of support for the index, and as also the financial part of Nifty, which is the Bajaj Finserves, the Bajaj Finances, and a couple of good banks, which is ICICI and Axis Bank. So a quiet kind of support is emerging at 19,600, and that's exactly visible in the options range as well. You see 19,600, 19,500 emerging as key support levels. In fact, if you see the kind of activity that's there on 19,600 puts, that's fairly phenomenal. And the resistance, of course, remains at 19,800. We are on Tuesday, just 2 days left for this monthly expiry of September. Remember, we had at one point of time been up 4.0% on the Nifty. A slide from there, it's still up about 1.5%, and over the next 2 days I presume that some sort of short covering will help the Nifty on its way up towards equilibrium, about a 2% gain, Sakshi, for the month of September.
Absolutely, Shail. So we'll continue to watch out for that. But on the Bank Nifty also, Shail, it continues to remain below the 20 DMA despite some traction from the lower levels. But the heartening part yesterday was the fact that the banks, including HDFC and ICICI, they at least did not put on added pressure, both on the Nifty Bank and Nifty. Your thoughts on the Nifty Bank today? What should traders do?
So, Sakshi, as you rightly pointed out, and I had said earlier, the change is visible in the texture of Bank Nifty. We mentioned the advanced decline ratio of 1:1 as far as the Nifty is concerned, but for Bank Nifty, this was far better. Out of 12 shares, 9 ended in positive territory. And we've seen a very sharp rally coming into the PSU banking basket. That's been the thread that has underpinned the market for quite a while. But, the stocks that closed into positivity were Kotak, about 1.6% higher. HDFC Bank, remember, it did not fall. It's a positive for Bank Nifty because more than 34% weightage of Bank Nifty is with HDFC Bank. It closed marginally in the green. And then, of course, we had a green close on ICICI Bank as well, 0.5% higher, and a green close on Axis. The close on Axis was mild, but remember, this is the only stock in the private sector bank space which is near a record high. So the underlying texture, the tonality of Bank Nifty is changing. Remember, it had lost about 2,000 points, 2,200 points last week, and that is coming back. 154 points higher yesterday at 44,766. And if you look at the options chain as far as the Bank Nifty is concerned, very, very strong support at 44,500 and immediately strong support at 44,600, and then of course the resistance at 45,000. So that's how Bank Nifty is placed. I would imagine the kind of shorts that we've seen in the system all through September on frontline banks should sort of ease a bit, and the rollovers would be better on average as far as the private sector space is concerned. Sakshi.
Okay, then as far as the FNO space is concerned, are we going to see more stock action, stock specific action today? Which are the top stocks that you're keeping on your radar?
Sakshi, it was very, very difficult for me to hold back from, giving you 4 or 5 auto stocks. But nevertheless, let's start with the one which is the most active of them all, and that's Escorts. Remember, it's one of those high beta counters that really work to the advantage of a trader that goes aggressively long. You'll have the daily chart in front of you as far as Escorts is concerned, and you'll see this sideways trend which is now breaking out. I think this is not the chart for Escorts. This looks like Bajaj Finserv to me. We'll have to, I think, repurpose this chart. The Escorts chart is different from the one that is there on the screen in front of you, but nevertheless, by the time we fix that up, here is some data for you as far as Escorts is concerned. 3.7% higher in futures yesterday, fairly bullish chart structure, and Sakshi, the delivery statistics are phenomenal, which basically means that this consolidation phase after in the past 2 or 3 weeks is pausing to an end, and about 6.7 times higher delivery we saw on Monday versus Friday. This was also coupled with a very high rise in open interest of about 12%. So this is one stock in the auto space that should do pretty well in today's trade. Apart from that, you had caught Bajaj Finance yesterday. The chart of Bajaj Finserv is excellent. Remember, there was a build-up of long positions as far as Bajaj Finance was concerned, but we see enough short covering in Bajaj Finserv that will push it higher. 1577, the counter ended 2.2% higher. Good steam still left here, and the open interest actually fell, pointing to bears moving away from this counter and the bulls stamping their dominance. So these are the two stocks that I'm looking at. Again, this is all technical and chartical data. Should you feel confident enough to take a long or a short position, do also take another independent financial advice. Sakshi.
All right, and with that, let's also look at what are the global cues and the handover we've got from overnight, Wall Street action. Remember, Wall Street did see some gains on Monday, and that's despite Moody's warning that a U.S. government shutdown will be a credit negative for the world's largest economy. The Dow Jones ended just marginally higher by about 0.1% or so. The S&P 500 and the Nasdaq, they gained about 0.4% each, snapping the 4 days of losing streak. So that was a bit of positive. Following the positive action on the US markets, we did see mild positive opening for the Asian markets, but they declined soon after, and that was because the treasury yields and the dollar index, they rose into sign investors are yet to fully recalibrate the interest rate expectations right there. Treasury yields, remember, climbed to almost 16-year high levels as well, traded above 4.5%, and that's why you can see the Nikkei, the Kospi, the Hang Seng, all of them down in trade, with the Kospi index really showing a 1.3% loss as well. When we talk about the flows, especially the foreign institutional investors' flows into the Indian markets, they've actually remained net sellers of the Indian equities for the fifth consecutive session. The FPI's offloaded stocks worth about 2,333 crore rupees. The domestic institutional investors, however, remained net buyers. They mopped up 1,579 crore rupees worth of stocks in yesterday's trading session. The FIIs, remember, have now sold off 20,600 crore rupees worth of equities in September so far as well. Shail, wanted to ask you, with the kind of, macros that are shifting on the negative side when we talk about the global setup, and of course the flows constantly being in a sell-off trajectory, what does this augur for the Indian markets? Can we continue to sustain our upward bias and upward trajectory despite the negative supports?
Sakshi, I only watch two things. Crude oil price down from 93 to 89. That is positive for us. It might be, a relative gain of 93 minus 89, but it's still better off. And the fact that the Dow has bounced very strongly from its 200-day moving average. Actually, honestly, we are running on our own steam. While it's always good to watch things which are there in the space globally, but let Asian markets react to what the Dow, the Nasdaq and the S&P 500 are doing. We are on our own. हम अपनी ही धुन में मस्त चाल में चल रहे हैं, and let's enjoy that moment while it lasts. I would imagine that the festivities are here, and you'll see the second half being better than the first half as far as demand, corporate demand is concerned. Quarterly earnings would be better, and this is not something that's new to 2023-24. It's been happening for decades. Half two is better than half one in India, simply because of how festivities pan out, the aftermath of the monsoon, the change in seasons. So all that prompts a lot of hectic buying activity in the broader economy, and that's going to help. You'll see Eicher Motors doing well. You'll see tractor companies doing well. FMCG will come back. You saw a record high in Tata Consumer yesterday. Hindustan Unilever will follow suit. So these are things that have happened traditionally over so many years and decades that it's sort of in my mind. So let the Dow do what it wants. Let the treasury yield do what it likes. But you'll see general positivity in Indian markets.
Okay, that is a positive news then for all the investors and traders watching this. Let's look at some of the stocks that you need to keep on your radar then today. Tata Steel, that's the stock that you should keep on your radar. Moody's has upgraded Tata Steel's credit rating to investment grade with a Baa3 issuer rating and a stable outlook right there. Yesterday, we did see about a 0.5% surge on Tata Steel at 127 odd levels. We may see the news flow impacting the stocks today also positively. RPP Infra, that's another stock that you should watch out for. New orders coming in, 482 crore worth of orders coming in through the letter of acceptance for projects in Tamil Nadu and in Karnataka. Yesterday, the stock was mildly negative at 67.8, but the news may, lend some support to the stock today. Sheela Foam has raised about 1194 crore rupees from the QIP issue, and this is at a discount to the previous close. The stock the stock was up by about 2% yesterday. We'll keep an eye out on the stock price today as well. The issue price was 1,070 1178. Remember, a 5% discount to the floor price of 1133. Angel One, that's another stock you should watch out for. It will be considering the second interim dividend on October 12th. The record date for the dividend has been set at October 20th. Now, Wipro, that's another stock that you can watch out for. It's sold a building and a 14-acre plot in Chennai for 266 crore rupees. So funds coming in into the company's account may lend some support. 1% downtick was seen yesterday, may see some rebound today. Ujjivan Small Finance Bank, it's partnered with SMC Global Securities to offer offline trading services to banks' customers. So that's another tie-up happening in the banking fintech space as well and the security space. So may see some kind of positive bias on that. 1.3% of a surge was seen yesterday. The stock was at 49 odd levels. Welspun Corp, that's going to be investing 350 crores in Telangana to set up a manufacturing unit for its subsidiary right there as well. The stock was just flat with a positive bias yesterday. So these are the stocks on my radar. Shail?
Wonderful list, Sakshi. And given the fact that it's Tuesday, I'd like to add one more stock which has a very, very strong correlation to this particular day, and that's Maruti. Already we've seen successive record highs on Friday as well as Monday. And I believe that this momentum is most likely to continue today as well. So these are the stocks at least that
Sure.
I'm watching us. And just the right time to get in touch with Deven Choksey, the Managing Director at DR Choksey Financial Services Private Limited. Deven Bhai, namaskar. Welcome to Market Today on BTTV. What a pleasure to host you on this lovely, lovely Tuesday morning. How do you see the sentiment in the market? We've seen a bit of a sell-off in the last week. Where do you think there is poise and strength in the market?
And glad to be part of your show today. Well, I think the larger part of the market story remains intact. However, I think the correction is happening in the market. In the last week, particularly, we saw the ETF, I think, taking some money out, particularly, I think, because of the strengthening of the bond yield in the US market has caused this kind of a shift of money, particularly the leverage funds which the funds have been, I think, employing. Those leverage funds have been taken out in order to pay out for the mark-to-markets in the bond portfolio that they would have in the global markets. And that has resulted into the shift out of money from India market, particularly we saw in the last week. Um, Unfortunately, I think the selling has happened in those stocks where the fundamentals have remained strong. Comparatively, companies like Reliance, comparatively companies like HDFC Bank, where the fundamentals remains absolutely convincing and strong, even though I think there are some merger related issues, I think particularly for HDFC Bank. But still, all the whole, I think it remains strong. Yet, I think you saw the kind of a sell-off happening in these particular counters, largely because of the fact that the money had to be taken out by them for the reasons which I've explained. And that's where probably we saw the softening of the market. Generally, it is also seen, Shail, that whenever I think the heavyweights in the market they come down, they pull down the weight of other basket stocks as well because of adjustment in the weight that is required. So, in my viewpoint, if I have to summarize in one line whatever I've explained, the technical adjustments in the market is currently happening, wherein due to the exodus of some amount of ETF funds is resulting into correction in the stock prices in the India market. I don't see anything fundamentally wrong. On the contrary, I remain distinctly convinced about the numbers which are likely to come up at the end of September quarter in respective sectors. So we are relatively much more better, and I think we'll probably see the revival in the upswing in the market going forward.
Okay. Deven sir, a very good morning to you. Thank you for joining in on this edition. I wanted to understand from you in the current markets, are there any stocks that you're liking at the current levels where you're turning more bullish on?
Yes, Sakshi, good morning. Uh, my take would be that some of the frontline stocks they are available at a good deal right now, mark valuation wise. Uh, Comfortable with likes of, as I mentioned, Reliance, comfortable with likes of HDFC Bank, comfortable with likes of ICICI Bank during the correction in the price. These are some of the names I think which are heavyweight names. I think where we are remaining distinctly confident. At the same time, in the IT space, we remain largely more comfortable now because the order intake has started for most of the IT companies and that too of a longer duration. So we like companies like Infosys. We also like companies like L&T Technology Services, where we see the fundamentals of the company remains quite comfortable. And at the same time, the future outlook on the company will suggest that I think current uh, price earning ratio, the valuations are relatively more comfortable than they were before. So in any kind of a price correction, if in these stocks, I think that is always a good opportunity to buy them. And that's where probably I think we continue to like some of the large cap stocks. We like some of the mid cap stocks also, but the valuation wise, we believe that somewhere they would correct. After which there would be an opportunity to buy them into the portfolio.
Okay.
Devan bhai, we've seen a very sharp run-up happening in all kinds of auto stocks. Two-wheelers like Bajaj Auto and Bajaj Finance are at record highs. M&M and Tata Motors in the commercial vehicle space are at record highs. Maruti just hit a record level on Monday as well as Friday. What really is underpinning this very sharp rise in stock prices and the froth that we see in the auto space?
In my viewpoint, Shail, I think this is the beginning of a very long-term bull market for the auto companies in particular. The underlying assumptions are as follows. One, because of the government spending on infrastructure, lot of surplus is coming in the hands of individuals. And those individuals are basically using this surplus for discretionary spending. Auto remains, I think, the favorite space along with the necessity spending in housing and other personal product items. But definitely, auto remains at the forefront as far as the discretionary allocation of money goes. Be it in the rural area for two-wheelers and the medium commercial vehicles, or be it in the urban area where passenger vehicles, along with the sports bikes which are there in two-wheelers, or for that matter, given the stability in the rest of the world today, vis-a-vis what used to be in last 6 months back, the exports of two-wheelers have probably once again started becoming, I think, a better reality. So companies like Bajaj Auto, they are registering a claim in their exports. Mahindra in particular has, I think, a good amount of order backlog with them, which they are executing in the current year. So there is a visibility of growth in the business. So if you ask me, I think in each of these verticals, the two-wheeler vertical, the passenger car vehicle vertical, the commercial vehicle vertical, and even from the matter of the farm equipments, tractors, etc., there also because of the good monsoon, the demand is likely to result into higher amount of offtake in the volume for companies like Mahindra and exports thereafter. So we are reasonably confident about the prospects. On the other side, because of the infrastructure spending and allocation of more money towards PLI scheme in the economy, what you are experiencing is the larger amount of industrial activity happening, and that is suggesting the demand growing for commercial vehicles. At the same time, we have not yet seen the impact of scrappage policy. Scrappage policy is gradually coming into force. So, in my viewpoint, I think that is also likely to result into higher amount of commercial vehicle demand and systematically for some of the passenger vehicles, I think, which is likely to get phased out who are beyond 15 years. So there is a demand situation which is remaining absolutely strong. This fabric has become very, very strong. And that is where I believe that there is a structural bull run case for auto and auto ancillary. Fortunately, the raw material prices or the input prices are remaining under control. And the problems pertaining to semiconductors, I think, of yesteryears, I think, has also been, particularly, I think, to a certain extent, has been resolved. So, in my viewpoint, I think this is a perfect recipe for auto companies to show better performance going forward.
Okay, Devan sir, wanted to ask you on the FMCG space, if you could list out for us some of the key reasons why this space is underperforming vis-a-vis several other pockets that have hit their record high levels in the last 2 or 3 months odd. Also, if you could share with us any of your topics from the FMCG pack.
So, given the situation of higher amount of growth continuing for most of the consumption companies, I think including FMCG, there should not be any reason for these companies to not perform in the market in the current environment. On the contrary, they should be performing reasonably better in the current environment. Two or three reasons as far as I think the stock price performance is not happening immediately. A, they're adequately valued. B, generally, I think the market prefers FMCG companies along with pharma companies on a for the defensive kind of an approach. When the uncertainty is large in the market, FMCG pharma kind of companies, I think, would be picked up by the investor. They switch over the portfolio from growth to the consistent performance like the FMCGs. Currently, more amount of money is getting allocated towards growth, and as a result of which, we are seeing the larger amount of activities happening in the counters, which are suggesting higher growth vis-a-vis the growth which is being produced by FMCG at this point of time. Uh, Fortunately, I think in FMCG companies, most of the companies have laid down a fantastic roadmap ahead. Nestle is talking about investing the amount of money which they never invested up till now in this country. That is the kind of sum of money they are talking about investing. Companies like Unilever is significantly investing money in building the AI platform to manage the entire demand prediction scenario for their products. So that I think they could reach out to the customer with the products in time and at the same time save the cost on producing those products, I think, which are moving faster at the same time. So all in all, put together, I think it's a blend of technology-led spending. It's a blend of, I think, the infrastructure-led spending that these companies are doing. So we remain distinctly positive. However, we put our price target, I think, at a reasonable level for likes of Unilever, likes of Nestle, where we believe that I think these companies are likely to grow relatively, I think, at a slower pace. If at all I have to put one company which could possibly grow faster in the entire basket, it would be Reliance Retail. However, it is part of Reliance Industries, so I think there is no case for suggesting a separate company. But the fact remains that I think if you are wanting to buy Reliance Retail, probably I think Reliance Industries would be a better choice because their growth rate is comparatively faster compared to any of the current FMCG companies. So that is where I think one can put larger money behind that.
Okay.
Right. Deven bhai, the one pocket that has really outperformed the market is the PSU banking sector. And of course, the second ranking PSU banks like Central Bank, JK Bank, Indian Overseas Bank, Union Bank, most of them trading 2 times below book compared with 4.5, 5 times book, what you see on the private sector space. Do you think, that the rally in PSU banks is overheated? And if no, what would be the 1 or 2 top picks that you would advise investors to buy even at current levels for the longer term?
So, Shail, this is a very important point, and maybe I think I may elaborate. The mid-tier PSU banks, the smaller PSU banks, which are having smaller ability to lend and grow the size, I think they are the ones who have possibly participated in this particular rally. Two reasons. One, I think valuation-wise, they have been at a discounted levels. Second, I think there is a possibility that post-election, post-election next year, the government would further take up the cause of consolidating these companies, which they did with some of the PSBs earlier. I think further round of consolidation will happen because my primary thesis remains that if the country has to grow to 10 to 12 trillion dollars by 2035, then the amount of credit demand will be extraordinarily high. And at that point of time, the smaller banks will not have a case to grow because I think they will continuously require higher amount of capital infusion. Thus, their ability to reach out for the growth, I think, would be limited comparatively because of the size. So, I think my reading says that somewhere in 24, 25, you should be seeing that consolidation of some of the PSBs further into making some of the larger banks. And that could be the time when probably the stocks could appreciate. So, given the fact that many of the investors who have picked up this particular story at this point of time is largely out of this particular scenario emerging, wherein they believe that I think this is likely to happen. In my viewpoint, on a standalone basis, the case is not registering well as far as buying the PSBs are concerned. But if this opportunity happens of
Right, sir.
consolidation and becoming a size, we can probably look into that.
Okay, we'll pay a bit of attention to pre-open, and it's a lovely, lovely green coat. I wish it were to hold, but it will settle down. Nifty now 100 points higher at 19,777. Let's look at the stocks that are contributing to this. Wonderful sharp uptick, which sadly will die down. Infosys 2% higher, 1506. Reliance 2394, 2.1% higher. I think it's Deven Bhai's impact. He's with us, and prices are ticking up. Bajaj Finserv, something that I pointed out, 1.1% higher, 1594. What's HDFC Bank doing? Down 0.4% higher at 1525. Nifty now settling into common sense, just 45 points higher, 19720. What's ticking otherwise? Axis Bank down 0.7%, 1011. I want to see what Hindustan Unilever and ITC are doing. ITC up 0.5%, 444.85. Let's immediately shift focus to F&O and look at the top gainers there. It's PI Industries 1.3% higher. We'll ignore it, 34.38. Let's look at Reliance again, 0.6% higher, 23.55. Delta Corp is 0.5% lower at 140. What's again ticking? Lupin 0.1% higher, 1120. There's nothing much happening here. Let's immediately shift focus to NSE 500. We have let's look at low price stocks. Okay, Suzlon 0.7% higher, 2570. Indian Overseas Bank 0.3% higher at 4365. We'll wait for these stocks to settle down. Nifty now in sensible range, 34 points higher, 19708. Sakshi, I believe you have a question for Deven Bhai on India's most profitable company. Please go ahead.
Absolutely. Deven sir, wanted to ask you, so most valuable company Reliance Industries has actually hit oversold levels now, after a 6-month gap. We have been seeing the stock trailing when we compare it with the benchmarks. It's only up 0.9% on a year-to-date basis when we compare it to the benchmark indices. Also just poised to breach that 200 EMA mark as well. How are you looking at Reliance Industries? And do you think now it has a potential to rebound in a sharp fashion after this level has been hit?
So I will use some of the past learnings of Reliance, I think, in predicting the stock price going forward. Whenever the company has entered into the capex mode, it has typically, I think, not given the appreciation. This has held true when they were implementing Geo, when they were implementing retail, and now when they are implementing the renewables at this point of time as well, we are seeing that the company's stock price is struggling. Come 24 and 25, I think this is the time when they have announced that they would be going live with the renewable platforms in bits and parts. In my viewpoint, I think that would be the time when you will see more amount of actions in the counter. As such, Reliance counter has shown this particular trade, wherein for 3 years it will probably move on sideways, and suddenly in the 4th year it will cover up all the droughts and get into, I think, a significantly large amount of appreciation in the count. Having given this particular scenario of the price, I feel that the fundamentals of the company remains distinctly strong and compelling. None of the verticals, on the contrary, I think is showing any signs of weakness according to me. And on the top of it, I believe that each of these verticals, including the industrial verticals like refining segment and oil and gas exploration segment, they are equally, I think, showing the sign of growth. At the same time, the verticals, consumer-facing verticals like Geo Platform and Reliance Retail, they are equally, I think, showing a higher amount of double-digit side of the growth, which is 19-20% kind of a growth. So in my viewpoint, I think the stock price should reflect the fundamentals of the company eventually. And it's a matter of time when I think some amount of technical adjustments get corrected, new funds get allocated. Larger companies like Reliance would find more buying happening into the counter going forward.
All right. This is the pain that we see that longer term shareholders undergo when they hold a particularly strong blue chip, which is undergoing a lot of capacity expansion. Remember, there was a phase when Reliance did absolutely nothing for 8 years, L&T did nothing for 10 years, Bharti Airtel did nothing for 10 years. And after that, the stocks have doubled and then doubled again. That is how equity markets work. and the two stocks that I talk about, Reliance and L&T, Deven Bhai has consistently maintained that they have to be a part of your portfolio, and there will come a time when the stock will reward your patience. One more stock, Deven Bhai, I'd like to take your opinion on. This is slightly on the how should I say, volatile part, or a part of the market that you really don't appreciate, but it has been one of your favorite stocks about 15 years ago, Suzlon. Should I continue, or you don't want to discuss it?
No, I think I have always liked, I think, this particular business because we saw even few years ago, I think, this particular opportunity that India has to progressively go into the renewables. And Suzlon at that point of time held the kind of a potential which we had always seen. Of course, we did not carry the euphoria as far as I think the price was concerned at that point of time. But systematically, once it started getting into the trouble and I think the stock price came down, at that time we very closely looked at this company. And then probably I think we started accumulating also some part of our investment when market I think crashed in this particular stock. In single digit, we ended up buying this company recently in last couple of years ago. Now, if this is a subject I think which we want to discuss, I feel that earlier the government policy was also I think not conducive where I think they suffered and they actually I think resulted into I think a financial mess. Today I think that situation is over. I guess I think that things are looking much more clearer. They have got the restructured balance sheet, and in my viewpoint, I think that things are looking better with the given order book condition and the consistent policy of the government. So it is a case where one can possibly hold on to and probably get the reward which one has not earned till this point of time.
Okay. Many thanks, Deven sir, for being with us on the show and discussing all these insights with all our viewers. Pleasure having you with us on BTTV. Here's hoping for many more interactions going forward too. And here's hoping you have a great day ahead as well. Let's now welcome our other guest on the show. Sudeep Shah now joins in. He's the Deputy Vice President and Head of Technical and Derivatives Research at SBI Securities. Good morning, Sudeep, and thank you so much for taking the time out for this discussion. The market's looking brighter, in the pre-opening trading session as well. 50 points high on the Sensex, 8 points up for the Nifty right now, 19,682. But your thoughts on the top two picks that you'd like to watch out for today?
Good morning, Shailji, and good morning, Sudeep. See, what I feel, Sakshi, is that what we are seeing with the markets in the last couple of days is, in fact, last 4 or 5 days, there was a continuous selling pressure. And now that the markets in the last, say, 2 days, Friday as well as Monday, are trying to hold on to the important support zones. So within these kind of trading volatility, what we are witnessing, I feel that couple of stocks that we need to choose one is from say FMCG sector, which is outperforming, and the second is from the PSU Bank Index, which is already continuing its outperformance in the last few days. So the first pick would be Tata Consumer. Now, if we see Tata Consumer, the stock has given a big breakout yesterday. The stock has sustained above its 52-week high now, and last few days, what we were seeing is that despite the fall in Nifty, the stock was outperforming. The pace of the fall in the stock was low. When on the days when the stock was negative, the volume with which it was selling off was quite low compared to the days when there was rises in the stock. So if we see the overall pattern in Tata Consumer, after a move from April to June, the stock went into a sideways consolidation between 840 and 875, 880. The moment it started sustaining above this stock, we are now eyeing a fresh breakout in this stock. And we feel that this move can continue up to 940, 950 on the upside, and one can buy this with a stop loss of 885 on the downside. The next pick that I feel could do well in the next coming few sessions is Bank of Baroda. Now, with PSU Bank Index outperforming in the past few sessions, we have seen this stock first breaking out of a resistance about 206, 208 levels, and then sustaining in this zone in the last 4 or 5 days, despite the selling pressure in Nifty. So here, what we feel is that now the stock is headed higher. It is on the cusp of a fresher breakout about 218, 219 levels, but still can be bought at current levels also with a stop loss of 210. So till the time 210 holds, we feel that the daily and the weekly chart structures are so strong that the up move could continue up to 228 to 232 on the upside.
Right. We've discussed both stocks, Tata Consumer as well as Bank of Baroda, in great detail over the past many days. In fact, Tata Consumer was also one of the picks that was on our radar as of yesterday. A record high here in trade on Monday, and the rally likely to continue as far as Sudeep is concerned. Sudeep, welcome to BTTV. Anything else in the large cap space that attracts your attention, which might give a nice swing on the upside in the coming 2 or 3 days? One, because of the end of September expiry, and two, because of strong rollovers.
See, one stock which is immediately coming to my mind is Titan. Titan, Maruti, both stocks are doing well now. Titan, if we see, it is just closer to just 1% of its, again, a fresh high. Where a couple of days the stock had made a high of 33.49, and despite the fall in Nifty, it is sustaining within 1.5% of its previous swing high. So I feel here the rolls are strong. The structure on the daily and the weekly time frame is strong, and the stock is not even breaking 20-day exponential moving average since many weeks now. So this is the kind of strength that a good quality stock is showing. So I feel that this stock can be bought at current levels as well as on a dip with a 30 to 50 kind of a stop loss, and this up move could continue up to 34 and 3400, 3430. Another stock which a couple of stocks which I feel that could still do well are Larsen, Axis Bank. Now both these stocks have also seen a lot of above average rollovers, and they have been outperforming in the last say 3 to 4 weeks also. So I feel these stocks also warrant our attention while we are going into the expiry week.
Okay. Also, Sudeep, could you talk about Bajaj Twins as well? Bajaj Finance was the top gainer yesterday, 4% high in trade, and it's also opening with a positive tick in the pre-opening trade. Do you think there is still steam left? 78.19 at these levels. Would you buy Bajaj Finance?
Absolutely. See, Bajaj Finance now, from a closing perspective, it has closed yesterday at one of the highest levels post, say, April, May 2022. And the kind of moves that the stock has shown in the past couple of months, in fact, starting April, there was a big rally to 7,900. Then it retested 6,800, which was an important support zone of 100-day moving average. And now, once again, it has started moving up and inching higher with volumes. A lot of significant shorts which were already there in the system got cut yesterday and in the last few days, and a fresh long build-up is witnessed here. So I feel that Bajaj Finance can continue moving higher. Maybe in the next series, it could even cross 8,000, 8,100 levels on the upside, given the kind of build-up that we have witnessed in the stock, as well as the kind of at-the-money put writing that we are witnessing in 7,800 and 7,700 also. So I feel that from the current levels, this also can be bought with a 76.90 stop loss and a 8,050, 8,100 target. Now, these levels are from a positional perspective, may not be achievable in a day or two, but one needs to have a positional approach towards this stock from here on.
Okay. Got that. Sudeep, on Escorts, I wanted to take your view. This stock is up 2% and the top gainer on the F&O space on a weekly basis. Do you think it has the strength to continue momentum?
Absolutely, Sakshi. See, if we see Escorts, it was in the last week of August, it had tested 3350. Thereafter, it just consolidated. It retested 3050 levels, 6-7% kind of a fall from higher levels, but it did not breach that 3000 mark. And especially, it did not breach the 20-day exponential moving average, which it has crossed, I guess, since June 2023. So, post that, this stock has never breached that. So there's a significant strength here, and we feel that this stock could continue head higher up to 3,400, 3,450 in the next few sessions. Support will be 3,170.
Right. Let's pay attention to the opening quotes that are in front of me. Nifty opens 14 points higher, flat 19,688. Remember, we are on T-2, just 2 days to go for the monthly expiry. Nifty Bank, flat as flat can be, 44,780. Nifty IT again up in the green, 32,649. Let's pay attention to what prices are there on the screen. I want to see what HDFC Bank is doing. Flat 1529. Reliance 23,338, down about 0.1%. Infosys down about 0.2%, 1478. Let's look at the F&O space. Sakshi, would you just look at rates that are coming? My software at the moment seems to be hanging.
From the F&O
Please go
basket, we are looking at Tata Steel as the top gainer. Remember, it's in news flow as well. Moody's has upgraded the stock and 1.5% up. It's now trading at. Eicher Motors, that Shail you were watching out for, is also the top, one of the top gainers in the F&O basket, up 2% at 34.75. When we talk about Tata Consumer, which is the pick of Sudeep as well, that's another top gainer from the Nifty basket, 1% higher in trade in the initial trade. We also discussed L&T, which Sudeep again has a positive view on. That's also trading higher by 1% at 29.27. Ultratech Cement, another stock that Shail you were saying that cement basket is going to be in focus, 0.7% higher in trade as well. On the sectoral indices level, it's the metal index that's topping the charts, 0.5% of an increase for this one. Consumer durables follows. Apart from this, FMCG, royalty and oil and gas, these are the sectors that are up in trade as well as the top gainers among the sectoral action, barring IT, private banks, financial services and Nifty Bank, which is just down by 0.2%. Rest of the sectors are still up in trade as well. As far as the Nifty 500 is concerned, you're looking at Century Textiles as topping the charts right now. The stock is up 3.2% odd at 1121. Shail, anything else that you spotted?
Sakshi, I think we need to get Sudeep immediately on Eicher Motors. 3488. This is the top gainer today in the F&O space. Sudeep, quickly your views on this counter.
Shailji, if we see Eicher Motors, the stock has given a breakout after, at least last 4 weeks. We have seen the stock trading in a range between 3280 on the downside and 3400, 3450 on the upside, and it was quite choppy. Post that, now we are seeing some kind of a decent breakout with volumes. And I feel a move above 3500 would surely confirm a bigger breakout on cards. So it is positive right now. 3500, if it crosses, a big thumbs up to the stock. It could move up to 3600, 3650 also in the next few sessions. Overall, the support would be around 3400 from now on.
Okay. Right. A few stocks let's take up. Manappuram Finance, block deals coming in, I think, and that is the impact on Manappuram Finance. 1.7% high in trade at 142.9. Sudeep, your view on the stock?
Sakshi, if we see Manappuram Finance, now Manappuram around it in the last 15-20 days from from 120 levels, it moved up to 155, 150, 155 levels, but thereafter it corrected back to 135. So it is quite volatile, quite choppy. And I feel rather than chasing this stock, it would be better if we try to add somewhere around 137, 138, which is the lower end of the range. And the 20-day exponential moving average is also placed around 143, 144 levels. So it's at quite crucial levels. It's just that it's a gap up opening, but I feel that we need to wait and see whether this gap sustains or we see the gap closing and once again the stock heading downwards.
Okay, got that. Two stocks I'll mention on the downside. One is Delta Corp. Remember yesterday, 17% lower. It ended after that GST notice of 17,000 odd crore rupees had come in. Today again, there's a 5% downtick on the stock. About 3% right now lower. 138.6 is the current level. I'll take your view, Sudeep, on this one. A lot of investors have lost a lot of money over the last 2 days or so. But, many would be contemplating perhaps an entry. What would you advise? A strict caution here?
A strict caution, and not only a caution, I would just request everyone just to stay away from this. See, a lot of times what happens is that such stocks are like a darling of all investors or traders. Like when they fall, people, it's like mouth-watering levels. but we need to understand in what context the stock has fallen. Also, we need to understand the context of the market when the markets is headed higher, and we are seeing the stock falling from 300 levels, 320 levels to 140 levels. That means there is something significantly going wrong in the past many months. And against the trend of market, I feel we should not just stick our neck out and just go and buy it. We
Sure.
might be right out of 10 times, but we should rather avoid. And I feel much lower levels are expected in this stock. The stock has given a multi-month breakout below one breakdown below 150, 160, 165 levels. So I feel the stock is headed downwards. We might even see double digits. To that extent, I feel that this should be avoided, frankly.
Okay.
Right. Sakshi, we'll pay attention to the broader market, and of course, in that time, Sudeep will pick out one or two stocks that he has seen on the charts doing well. At the moment, Nifty is flat, 13 points up, 19,688. Bank Nifty slipping about 57 points lower, 44,705. In terms of the broader market, let's look at what the advanced decline ratio is. 1240 to 511, so easily 2:1 in the broader market. Let's look at the NSE 500. 340 stocks here in the green, 150 in the red. So bulls are on the front foot. And which is the top gaining index? The Nifty Metals Index, 0.1% higher, 6804 as far as price ticks are concerned. Now let's look at the high beta list, stocks that are moving up and have a history of outperforming the market. 2% up on Masgaon Dock, 2203. 2% up on MTAR Technologies, 2402. Cochin Shipyard, 6% higher, 1046. In fact, Sakshi, the 14 stocks that I track in the defense space, all 14 of them are in the green. We'll take Sudeep's view on that as well. Let's look at high beta again in the low ticket size zone. We have Mannapuram up 1.3%, 142.40. Tejas Networks up 1%, 838. Canara Bank up 0.5%, 377. PNB up 0.5%, 80.6. Let's look at the rail pack. And within the rail space, we have gainers in the form of Titagarh Wagons, as also BEML and RITES. This is what is happening as far as the high beta space is concerned. And surprise, surprise, it's L&T which is coming back into the focus at the moment at day's high 29.39, and also the top gainer in the highest weighted stocks within the index, up 1.3%. Sudeep, L&T and anything else that you've got?
Apart from L&T, if we just see L&T, we discussed in the morning that the stock has been outperforming, and maybe largely due to the buyback that is currently open, and we are feeling that the stock is now not even breaching this 2850, 2860 mark. And if we see the medium-term trend of L&T, since June 2023, start of June, when the stock has broken out of its 20-day exponential moving average, and remember we assign a higher weightage to this 20-day exponential moving average, which defines a short-term momentum in a stock and short-term trend in a stock. The stock has never broken its 20-day exponential moving average, averages of 20-day closes also in the last 3-4 months. So such is the strength in the stock. And while the markets have been a bit weak in the last 4-5 sessions, this stock on the other hand is at its highest level. So there is a higher relative strength also at display in this stock, and I feel from current levels also this can be bought with a 2890 stop loss and 3030 target on the upside. Now, apart from that, a couple of stocks that are coming in my radar. One is MCX. Now, MCX we saw yesterday giving a big bang breakout. It broke out of its consolidation of last 6-7 trading sessions, and it has in fact crossed 1850, 1880, which was a multi-month breakout. Since December 2021 we have not seen these levels on the stock, so it's a multi-month breakout, and I feel from the current levels also the stock could still head higher. We might see some intraday sell-off in this stock since it has moved too much since yesterday, but overall I hold a positionally I hold a positive view in this, and I feel overall 1850, 1860 will now act as an important support, and on the upside we could even see the stock crossing beyond 2100 on the upside.
Okay, got that. What's also buzzing is the entire energy basket as well. Let's look at Coal India. That's up by 1% right now at 290, 291 odd levels. Following it is also, Power Grid. That's up 0.25%. SJVN is up. ONGC is up in trade. NHPC is up in trade. All these power and energy basket names are buzzing in trade. Your thoughts, Sudeep, on Coal India or any other stock that you like from this basket right now?
Sakshi, if we see Coal India, it has started a big time outperformance say in the first week of September, right from the time it has broken out about 235, 237, where there was a trend line resistance, and since then the stock has not looked back. So here and after that, in the last 6-7 days, the stock has witnessed some consolidation between 275 and 285, and it's kind of a flag breakout on the daily charts like that we are witnessing. So I feel from the current levels also the stock is headed higher. Maybe it could dip a bit up to 287, 286 on the downside, but overall now 283 will act as an important support, and we feel that the levels on the stock on the upside which could be witnessed should be around 305, 307 now.
Okay. One more stock I'll discuss with you, Sudeep, and that is RPP Infra. Remember, I was talking about it before Prima Open had hit, and that was on the order wins that the company has now got worth 482 crore rupees. The stock has reacted very, very sharply, 5% higher in trade as well, and it's now trading at a year's high level too. RPP Infra is right now at 71.15. Your thoughts on RPP Infra, and is this a good level to take an entry?
Sakshi, see, this is a good level now. If we see the positional charts, the stock has just started to uh, trade in a positive territory from a longer term trend perspective. So currently it's in an upper circuit, so I don't feel anyone would be able to buy it. But if in case the circuit opens and we see some kind of a flat to range bound action, then this could be accumulated from a medium term perspective. And remember, the traders or the investors will require to have some patience in this stock. The news is good, kind of partially getting discounted, but overall trend is now turning positive. So it might take time, but steadily the stock could head higher up to 9500 levels. And overall, the support zone for this upside trajectory, the upside momentum that we are envisaging, could be around in the range of 60.
Right. I think the theme for today will be the defense space, and I'll request the PCR to fire a daily chart of Cochin Shipyard. Your view here, Sudeep, a very nice swing trade in the making. The counter is already the top gainer as far as the defense space is concerned, and fairly strong volumes coming in the cash segment. At the moment, I see about 11.5 lakh shares already traded, and it's still 928. What are your charts telling you?
In Cochin Shipyard, if we see the stock, once it had broken out above 570 on 27th of June, where it broke out of its 20-day exponential moving average. Post that, we have not seen the stock retesting that till it moved up to 1250. Now, in the last couple of days, the stock has retested this 20-day exponential moving average. It closed yesterday below that, and once again, it is now recovering above the 20-day exponential moving average. So we feel that this is a very good entry point from a trading perspective, because once a short-term moving average is retested, and from there the stock is still heading higher with the overall trend being positive in the last 4 or 5 months, we feel this is a very good entry point at the current levels. The stop loss could be 980, it's 4-5%, but given the magnitude that this stock moves in a day with the kind of volatile moves, I feel this 5% stop loss is sufficient, and 980 could act as a very good support on the downside. And we could see levels of 1098 and 1140 on this stock in the next few sessions with the kind of momentum that the defense stocks have resumed with.
Okay. Let's
Absolutely.
also...
Apart from Cochin Shipyard, we have a strong traction coming in Masgaon Dock, as well as BDL
Yes.
and BEML. So it is a sectoral trend that's pushing the entire defense space up. We've checked out one high beta counter, which is the ticket size, which probably retail traders don't prefer. But here is a high beta counter with a low ticket size and a fabulous move already building up. Sudeep, for you, Punjab National Bank 0.8% higher, already 2% rise in open interest. What are the charts telling you? The stock at the moment at a 6-year high. These prices were last seen in 2017.
Yes, so while we were discussing about PSU Bank's Bank of Baroda, even this bank, this stock has given an extremely good breakout now, and this is a healthy breakout. Generally, we don't associate healthy breakouts with PSU banks over the last several years. While we have been discussing on PSU banks, except for the last 3-4 months, all these pullbacks always used to witness selling pressure from higher levels. But now that the trajectory, the landscape is changing with respect to the PSU banks, I feel these breakouts are for real. And also, if we see in the last, say, month, in the month of say July, there was a fall in Nifty and the PSU Bank index, but PNB did not fall much. So that, from that perspective, it was quite outperforming. And since then, the stock has not looked back, and the stock has broken out about above all its major moving averages and previous yearly resistances. So I feel the stock is still headed higher up to 9,500 levels. There could be a small dip since it is approaching overbought zone, but overall 75 levels could now act as an important support. Dips should be used to buy, and I don't feel right now at the current levels one should keep on chasing the stock, because upside could be limited for 4 or 5 rupees from a short-term perspective. Medium-term perspective, the uptrend is intact, but from a short-term perspective, we could approach 77, 78 levels, and dips to that level should be used to add the stock and then ride the rally on the upside.
Okay, markets coming under pressure right now, about 20 points lower in trade for the Nifty. 19,654 is the level at which we are looking at the Nifty right now at 932. It's now at the lowest point since it began trading. Sudeep, your thoughts on the Nifty right now? Where do you see it moving, and what would you advise investors?
Sakshi, frankly, if we see Nifty's chart since last, say, today's 15 minutes and the last 3-4 hours of yesterday, it's not doing anything. It's just trading between 19,620, 19,600 on the downside and 19,700, 720 on the upside. So it's just trading in a 0.5% range. But within this 0.5% range, if we see the open interest developments, 19,600 put writers are getting more stronger, 19,700 call writers are getting more stronger. So they are now kind of developing a fort around these strike prices, and I feel we might see some kind of range bound movement until and unless we break down below 19,580 or we break out and sustain above 19,720 on the upside. The larger fall is right now being contributed by Bank Nifty, if we see here. So it is underperforming, and I feel Bank Nifty holds the key for any bigger reversal in Nifty also. So important levels for Bank Nifty would be 44,950, 45,000 on the upside from a positional perspective, where the 20-day exponential moving average is placed. And also in the last 3 days, one on Friday when there was bond inclusion news of JP Morgan, yesterday also when we saw the Bank Nifty rising in the first half, both times we have seen Bank Nifty facing pressure from 44,950, 45,000 zone. So I feel now that could act as a critical level on the upside, and that could determine the entire trend for the market, for Nifty, Bank Nifty, all the indices.
Okay. We've been discussing all about the festive spirit in the air since yesterday. The stock that's moving up at record levels right now is Trent, the Tata Group firm. You were talking about Titan, Sudeep, but now from the retail basket as well, the stock is now trading at 21.79, 1% higher in trade. Yesterday, we were speaking to Saurabh Mukherjee, and he mentioned Trent as one of his picks from one of his PMS services schemes as well. Your thoughts on Trent right now? What would you advise investors? What do the charts suggest?
Sakshi, this has been a dream chart. Now, if anyone is holding it from lower levels, it can't get better than this. A good quality stock continuously heading higher, not seeing even an iota of correction. So I feel from the current levels also the stock is expected to do well, and we are seeing fresher volumes, fresher build up at higher levels also in this stock. So I would just like to tell one thing to the investors and traders: ride the trend until it is broken, and keep important support levels in front of your eyes, so that if there is a downturn, you get an immediate caution, and you get alerted very fast. So for me, that important support level would be around 2050, 2000 levels from a positional perspective. So until and unless the stock is holding these levels, I feel it is headed much higher. But in case this is broken, then we need to get slightly a bit cautious, because even the stock is outperforming, it could then witness a period of consolidation. So this zone of 2020, 2000 zone would act as an important level from here on as a support.
Let's Sakshi look at Eicher Motors. A very interesting trade is developing here at 9:35, which is about 20 minutes into the opening. The stock is of course the top gainer on the Nifty, up about 3.1%. But what's really interesting is the open interest, which is at about 10% higher. Let's draw out the daily chart of Eicher Motors. Sudeep, since you track rollovers pretty well, could you comment on how Eicher's rollovers are happening? This is a stock that is emerging from a sideways trend from 14th of July to about 25th of September. So a 3-month sideways trend is now getting broken. Probably it will be one of the stocks to watch on the long side when it comes to October's expiry. Sudeep, your views on the medium term charts?
Shailji, firstly, let's talk about the rollovers. Now, if we see the rollovers in the last 3 months, say July, August, they all have been on the sideways trajectory. There was not, we did not see any big bang moves in terms of rollovers, any bigger observations here. But as we are talking, in the last couple of days, we have seen some kind of a serious short covering happening in Eicher. It's still not long built up, but the shorts are getting cut in a big way. So I feel that from current levels, at least with this short covering itself, the stock could head higher up to 3600. And in the morning, if we discussed also about 3470, 3460, it was sustaining. So I still hold that view that we could see levels of 3600 on Eicher, and above 3600, it could be a big bang breakout on the upside. So I feel well, let's keep our fingers crossed with this stock, and the stock is just showing some kind of a good sign after many weeks of consolidation.
Okay. Sudeep, let me draw your attention to the metal names. The metal index is the top moving index today. Of course, we've discussed Tata Steel. Apart from this, we are also looking at JSW Steel moving in trade, 0.5% up in trade right now, 1.6% higher. Jindal Stainless is up by 2%. You're also looking at Nalco, Steel Authority of India, 1% higher each. Hindustan Zinc, JSW Steel. Your thoughts on any of the metal counters that you like at this level, and would you suggest that this is a good time that investors can start building on their positions in metals?
Sakshi, if we see Nifty Metal Index, now Nifty Metal Index has corrected from over 7100, 7150 levels to almost 6750. Now, with this fall in the last 3-4 days, it's still sustaining below its 20-day exponential moving average, which is placed somewhere around 6850. So I feel it's a bit early, a bit premature to call that the metal index could once again have a big bang move on the upside. I feel still 6860, 6850 needs to get crossed, and the way the dollar index is moving above 105.50, so that is not giving me comfort for adding metal stocks from a positional, from a medium term perspective, or even from a trading positions perspective. So I would be a bit cautious while adding metal stocks, because in case we see a breakout in the dollar index above 106, 106.20 levels, that could mean a knee-jerk reaction on the metal index also. So we should just keep a wait and watch approach on metals. And however, if we just see all the metal stocks to put together, then I feel one stock that is still trying to hold on at the current levels and not buckling down under pressure with in the same proportion as metal index is Jindal Steel. Now, Jindal Steel, if we see the stock yesterday also, while all the other metals were still under pressure, this stock was in the green, this stock was holding out, and it's rebounding above its key averages on the daily and weekly charts. So I feel for Jindal Steel, 685 would be a key support zone. Till the times the stock holds this level, we could see a move up to 715, 720, which is the previous swing high of the stock.
Okay, got that. No matter how much we discuss about the PSU banks, that is a story that continues to grow only stronger, especially when it comes to the second-rung PSU banks. Shell's favorite is Bank of Maharashtra these days, and today also it's up by 2% odd. Indian Overseas Bank, which I mention a lot of times, is again up in trade. UCO Bank, Bank of India. I mean, there is no stopping with the kind of rally that we are seeing. How are you looking at the charts here? Which is your top favorite PSU bank currently?
My top favorite, see, from a trading perspective, we already discussed PNB. But
Yeah.
if we see from an investment standpoint or some kind of a safety standpoint, that even if there is a sideways momentum, what stock can outperform, that could be Bank of Baroda. And from a media, from a if we just go a bit out of these top three, four names of Bank of Baroda, PNB, Canara Bank, then it could be Indian Bank also. Now that stock has silently outperformed and outperformed in a big way. If we see in the last few months, right from 300, the stock has moved to 400, 425 levels. So I feel both these stocks, Bank of Baroda and Indian Bank, really look very good from an investor standpoint. If someone has a horizon of 6 to 12 months, then these stocks could do well from the current level also.
Right. Sakshi, I think we need to mark the energy space. You had started with Coal India. The rally spread. Look at NTPC heading towards a fresh record high. 241 is what is sticking in front of me. And we see a lot of good moves coming into Tata Power. That stock at about 261 is also trading at the day's high. Good amount of traction coming into a very high beta space. Which goes by the name of JSW Energy. So these are the stocks that are coming up, and of course Power Grid up about 0.3%. The strongest rollovers are happening in Tata Power and of course JSW Energy, which is the trader's favorite. So these are the two charts that Sudeep will be checking for us.
Khalji, if we see Tata Power, and you just actually, I could just say that you have taken out the words from my mouth. If you just see the message, I have just messaged Tata Power, and I feel that Tata Power from here on looks really, really beautiful. And if you just see the daily and the weekly charts of Tata Power now, once the stock has moved above 220 up to 275, it was a one-way rally there with the kind of momentum power stocks were having, and now it has retested its 20-day exponential moving average, which is the most important from the short term perspective, and once again now it is heading higher from that level. So taking support at this key zone of 255, 254, and it has held this level in the last 3 days. So I feel till the time 254 holds, once again we could see this positional move in the stock heading up to 278 and 285 in the forthcoming few sessions. So I feel Tata Power can act as a dark horse in the next month or so.
Okay, got that. All right, let's keep focus on some of the other stocks as well from the small cap 100 basket, which is now picking up pace. Let's look at some of the stocks that are buzzing. Of course, you have Credit Access Grameen, that's up by almost 3.5%. KRBL, the rice company, is up by 3.5%. KEI Industries is up in trade by almost 4% odd levels. Raymond is up by 3% again. You also have HFCL, that's up by 2%. Anything from the small cap basket that you like currently, Sudeep?
Sakshi, if we see the small cap basket, I feel HFCL is still doing better, because if we see Raymond, this is just the first day of the rebound post a bigger fall from 2200 to 1800. So if we see the small cap basket, then I feel HFCL is at its important support zone at 71, 70 is an important support zone. It's trying to rebound and trying to cross its 20-day exponential moving average. So above 74.50, I feel HFCL can move up to 77, 78 on the upside. But I would still recommend that we should right now focus into mid caps, quality mid caps and large caps, because we are still not out of the woods. If we say from a Nifty standpoint, there is some selling pressure in the markets. So let the small caps reverse from here, give us a signal that the trend is shifting, and then we could aggressively add on to the small cap space.
Okay. Well, many thanks,
Wonderful.
Sudeep.
I think Sakshi, it's Sudeep bhai, thank you so much for your time. I think one of the stocks that you should check before going is NTPC. I think the traction is fairly strong today. Of course, we are at a record high, but the stock likely to come out of a 2-week consolidating phase. Your view on this one, Sudeep, 1% higher, 242.15 days high.
One more outperforming stock if we see NTPC. Now, if you see NTPC, while the markets have been falling, even a lot of other power names had fallen in between, but this stock has not broken 235 on the downside. So after a bigger breakout, and remember what the pattern that this stock is making is that it rallies, then consolidates, then gives a flag breakout, again rallies, and this is another flag breakout in process, which I feel. So from the current levels, if we see the base, it is around 235 levels. So till 235 holds, I feel the stock is headed higher up to 250 to 55 in the coming few sessions.
Okay. All right. Well, many thanks, Sudeep, for being with us on this edition and discussing all of these stocks. Good to have you with us on this special edition as well. Let's now shift focus on our corporate radar section. The company on our radar today is Thyrocare, and the company's top management is here with us to discuss the business outlook going forward from here. Rahul Guha, the MD and CEO of Thyrocare, now is with us. Many thanks for taking the time out for us, Mr. Guha, and sparing time for us. We wanted to understand the current, the business outlook that you have from your company. Of course, we've seen the peak, go by in COVID-19. What is the business outlook right now that you have? Has it completely reduced your exposure to COVID-19 and the revenues that you were getting from there? Has it completely minimalized now? What is the next big area where you're getting the revenues out from now? Mr. Guha, could you please unmute yourself? Yes, please.
Look, COVID, I think, is from a testing point of view, at least behind us. If you look at our quarterly results also, we no longer split our results between COVID and non-COVID. So I can safe to say COVID is, out of the base. Overall, if you look at our business, our offline business or our franchisee business is doing very well. Last quarter, it grew by about 16-17%, continues to grow very strongly, and that is largely driven by the back of the tailwinds that we are seeing in non-COVID testing. People, as a result of COVID, have understood the value of good quality, affordable testing, taking good care of their health, and are coming back to the stores at least to see how they can better manage their healthcare. Just to give you an example, in the fever season that we've just been going through and will continue into October and November, we have seen fever testing levels at levels we have never seen before in the past. So it's very clear more and more people, when they have fever or any kind of illness, are looking to the testing providers for solutions on how to better manage their illness. So I would say our offline business is doing well. Our partnerships business, which is largely partnerships where we service revenue for many of the online partners, that has been flat, and I've talked about it in our analyst calls as well. And that is largely because, as you would have seen a lot of news, many of the online players have actually reduced discounting, and that has affected their volumes, I would say, particularly over the last quarter. But as it normalizes, I expect that to also pick up towards the tail end of the year.
Okay. Shail,
Right. Mr. Guha, welcome.
Well, thank
Yes,
you.
Actually, please go ahead.
all right, Mr. Guha, there is some kind of a technical glitch. We'll connect again to you. I think there is some audio issue that there is happening, and we'll connect back to you. Meanwhile, just let's get back to the financials of the company as well. When we talk about the Thyrocare profitability over the last few quarters that we see, in Q4 the company had reported 11 crore rupees of a profit. In Q1 it increased to 20 odd crore rupees. However, when we see on a year-on-year perspective, it's gone from 17 to 20 odd crore rupees. On the operational level, things have been slightly better off. 34 crore rupees of EBITDA that the company has reported in Q1 of FY23. The revenues have been to the tune of 120 crore rupees in Q1 of FY23. Slight dip from the previous quarter, that's 124, 125 odd crores, and slightly lower than the Q1 of FY24 as well is what we have actually seen. Shail, this space, entire diagnostic space has again come into the limelight. We've been looking at stocks like Divis Laboratories, Laurus Labs, all of these stocks, buzzing in trade of late as well. The healthcare business, Metropolis Healthcare, all of these stocks have been also coming off their long hibernation after COVID-19 as well. What now, we would want to understand is that there are fresh concerns of COVID emerging in the global aspect as well. Could that be, something that this entire diagnostic space be looking at?
Sakshi, I really don't know what the future holds as far as, impending pandemics are concerned, but one thing is very clear. We'll wait for Mr. Guha to come back. The competitive environment in the diagnostic space, the online diagnostic space, or the ones that are getting listed freshly, is getting really how should I say, crowdy. I believe Mr. Guha is here. Let me just put the question to him. Mr. Guha, I look at your margins on the operating part, and they're slipping probably for one reason, that the diagnostic space is now getting intensely crowded. For those having mobile phones, I can assure you, every day we get calls to get 70 tests done in 1300 rupees, get 101 tests done in 1500 rupees. With this kind of a competitive structure in place for the industry, how do you see long-term growth coming in for shareholders who want to perhaps buy this dip in your stock price?
I hope I'm audible clearly this time, Mr. Bhatnagar.
Yes, Mr. Guha, we can hear you clearly, sir.
Okay, wonderful. Look, as I said earlier, when it comes to our margins overall, you have to look at it at a normalized basis, because there is an ESOPs charge that keeps coming quarter on quarter. But our normalized EBITDA margin has been improving both quarter on quarter as well as year on year. So at least from our financials, I would say we are definitely on the right track and growing. When it comes to competitive intensity, yes, if you go to Q2 and Q3 of last year, it was quite competitively intense. But we have seen two things happen. One is actually the shift back to offline. So if you look at our results slightly more in detail in Q1, you would see our offline or our franchisee business actually grew north of 15% year on year, and also sequentially. And it was almost at a non-COVID high that we have ever seen. So it's very clear that while there is a lot of competitive pressure on the online space, the offline space is seeing good tailwinds for growth. And why that might be? For Thyrocare, actually only about 15% to 20% of our business comes from metro and tier 1. 80% of our business comes from tier 2 and beyond. And that's where we are seeing a lot of our growth for our franchisee business. That is actually driving almost all the growth of our franchisee business. When it comes to competitive intensity, a large part of the competitive intensity comes from online players. What we have seen is their footprint typically is the top 5 to 7 cities in the country. Actually, very few of them go beyond that footprint. So for you also receiving these SMSs of these kind of offers, actually it's largely because you're sitting in Mumbai. As you go into even Nasik or Nagpur, actually you'll see a big fall off of the kind of offline offers, and people go online offers, and people actually go offline to the centers where there is a very good physical presence and a backup there. So I would say yes, competitive intensity had been at its peak in Q2, Q3, but has eased off, over a period of time. But largely, the tier two markets in India have largely been unaffected by these competitive pressures, and Thyrocare has enjoyed the
Sure.
tailwinds of that growth. When it comes to online, also, just to complete the point, if I look at the pricing and the amount of discounting online, actually that has come down substantially over the last couple of quarters. One of our sister concerns, Pharmeasy, which actually Thyrocare supports with diagnostics, you would see actually year on year they've raised prices by almost 18%. And that is true for almost every online player in the country. There was a report recently that benchmarked the price increases online. It ranges between 15% to all the way to
Right.
50%. At least that's what that report says. And so I would say, this discounting model, I
Yeah.
think many people have realized it's unsustainable from a margin point of view and have pulled back from that.
Okay, Mr. Goa, since you said that you are focused on the offline space and that is where you get your maximum business from, any expansion plans, both organic and inorganic? You said that your franchise model is giving you more business right now. What would be the expansion strategy? What are the kind of investments that you're planning in your offline business? Where all are you planning, geographically as well? And will it be in organic fashion or inorganic fashion now?
Our expansion plans in India are largely organic. We actually are present very strongly in tier two and in some part in tier three, but we plan to expand much deeper into India. Our mission is to ensure affordable, good quality diagnostics is available to every Indian. As a result, we have expanded our lab network. Today, we have 31 labs in the country. 2 years ago, we had 15, and we continue to expand deeper and deeper into the country to ensure quality diagnostics is available to one and all.
So how many labs do you want to have, like by the end of, say, FY25?
I think we'll be happy. Today, if you drop a pin anywhere in the country, there will be a Thyrocare lab within 150 to 200 kilometers. And our goal is to, that is the kind of turnaround time that we aspire to. So I would be happy with 35 and 40, between 35 and 40 labs over the next 2 years. I think our network expansion is largely done. Now it's really about market expansion.
Sir, one more question before I let you go, and that is on what is your revenue split when it comes to your business from B2B, and what is the revenue that you get from B2C? Since you're talking about direct consumer, direct to consumer, you're talking about your offline businesses, but you also have a lot of corporate tie-ups as well. Could you tell us that?
Yeah, we call it our franchise business and our partnerships business. The rough split is 2/3, 1/3. So 2/3 of our business is franchisee and 1/3 of our business is partnerships, which is all our corporate partnerships, online partnerships, and the like.
Okay, got that. Thank you very much, Mr. Guha, for sparing time for us and discussing your business outlook with us. All the best for the coming quarterly earnings, and we shall catch up again after your earnings as well in Q2. Let's get back to the markets. Shail very well pointed out, Eicher Motors, the top gainer, 4.4% higher. I think this should be the superhero of the day, but you tell me.
Sakshi, I think it's the visit that I paid outside the Eicher showroom yesterday.
Yes.
Every single day, there's an Eicher showroom where I live. Every single day when I pass through it, I have this feeling I must go inside and buy a bike. And every single day, I hold myself back. The fourth bullet in my life at 52 is not the right thing to do. Nevertheless, it's the stock price that is doing phenomenally well. At the moment, 4.2% higher. It's the top gaining stock both in the Nifty as also in the F&O space. And what's really interesting, Sakshi, that the momentum is very strong. 11,605 lots have been trading, and you will not believe this. Eicher Motors has traded more lots in F&O than Reliance, and is the second most active traded counter when it comes to stock futures. So that's the power of spotting a stock at 9:15, and you get it only and only on BTTV. 12.2% rise in open interest, and good days are beginning for Eicher Motors. So it seems this was the call was also given by Sudeep. Good things happening. I'm seeing smaller block deals of 1928 shares, 3356 shares, 2852 shares in the cash market as far as Eicher is concerned. Remember, it's a high ticket, low liquidity counter, and despite that, you've seen a very, very sharp upswing coming in the speculative part of F&O. Sakshi.
Absolutely. So definitely Eicher Motors as the superhero of the day, 4% higher in trade at 35.19, going very, very strong. Of course, they are getting the positive cues from Shell that he's going to buy another Royal Enfield from them. But apart from this, let's also look at some of the other movers. We also have the metal stocks going strong, 1% higher. We have the other auto majors also moving up. Oil and gas is now picking up pace, 0.25% higher in trade. Consumer durables, PSU banks, FMCG also picking up pace as well. On the top gainers on the Nifty, we have Eicher Motors, we have Tata Steel, we have Ultratech Cement, Dr. Reddy's and NTPC also now that Shell pointed out from the energy basket at record levels, and these are the top 5 gainers on on the Nifty 50 right now. Let's also get another guest for you in the interaction of corporate radar. We have JSW Infra as the next company on our focus, and the company's management, Arun Maheshwari, joint MD and CEO, is with us. JSW Infra, remember, is a port-related infra company. The IPO is underway, and we did see the IPO getting subscribed 43% on day one. The retail investors portion was oversubscribed at 1.4 times. It's a 2,800 crore rupees IPO, which comprises all of fresh issuance. There is no OFS component right here. The price band is 113 to 119 rupees per share. Mr. Maheshwari, good morning to you, and thank you so much for taking the time out for this discussion on Business Today TV. Sakshi this side, and with me is my colleague Shail Bhatnagar. We'd like to understand a little bit more from you on the business outlook for your company as well, and especially on the IPO. First off, if you could tell us, give us a breakup of the 2,800 crore rupees that you are raising. How are you planning to use it, and what will be the portion that will be used to pay off certain debt, and what will be used for, say, expansions and working capital?
Sure. Thank you for taking us in. And out of this 2,800 crore rupees of the IPO size, about 1,200 crore rupees goes for the capex planning. There are certain capex which are defined in the RHP. I think we are doing one of the LPG terminal. We are upgrading our container terminal, and there are some smaller capex over there. So out of 2,800, 1,200 goes into the capex. About 880 crore rupees goes towards the payment of debts, which are FCNR. And balance 700 crore rupees would be towards the general corporate purpose. So this is how the 2,800 crore rupees is distributed.
Mr. Maheshwari, good morning and welcome to Market Today on Business Today Television. There are two things. One, I must congratulate you for having an IPO in which the entire proceeds will be going to the company. We have over the last 3-4 years been buffeted and how should I say pained to see a large part of the IPO being an offer for sale and many IPOs actually being offer for sale. So our very sincere congratulations to you where the amount of money raised from retail investors will go into improving the company and making it bigger and bigger. So whoever has advised you this, and to your management and to your board, our congratulations for this particular step. Also, the pricing is very reasonable given the fact that we've seen absurdly priced IPOs coming over the last 2-3 years. Tell us, sir, how is the business? Where do you see cargo coming in at a greater speed, either on the western side of the coastline or the eastern side? And where is the maximum expansion targeted?
Okay, I'll just take you through one of the key areas before we get into your specifications. I think, this sector, particularly if you look at India, India's total cost of logistics is about 13 to 14% of the GDP, which an economy of our size and scale, if it has to grow further, it should be reduced to single digit. Now, government has been very mindful of it in the last 4 or 5 years budget. If you see, a lot of investments has been targeted towards the development of infrastructure, largely to reduce this cost, so as to we remain competitive in the international arena. So now, as a sector, the country has a complete focus. An economy of $4 trillion, it has to go to say $10 trillion in another 5-10 years. It cannot happen without developing its shores. 95% of the EXIM volumes are through seaports. And in India, which is a sunrise industry in India, it's just about 25-30 years old industry. Before that, only government was managing and operating the ports. So very few players are there in this sector. There are high entry barriers. You need to have a very deep pocket, good balance sheet, strong management, and very, very good governance structures in place. Otherwise, survival of this any company in this sector is quite challenging. If you see, only 2-3 players are there pan-India today. Otherwise, there are only regional players over here. Now, having said that, if you see the cargo volume growth in India, it is phenomenal. As a port sector, it is going about 4 to 5%. But the way whenever the economy takes turn, the first sector which gets the boost is the infrastructure sector. And infrastructure, whether it's a railways or roads or ports or anything else which is connected to delivery or receipt of services, are the ones which are getting impacted. So this is a sector wherein the investments will be required huge. If I had to, look at total India's capacity is only 2,600 million ton. Imagine 7,500 kilometers of shoreline and only 12 major ports and 35 or 40 minor ports, functional minor ports are there. So this offers a great opportunity for companies like us, which are into this business pan-India, second largest port sector company on the commercial side in India, and one of the largest on the terminal side of government ports.
So I have a two-part question for you. The first part being, how have the volumes really shaped up for you in the first half of the calendar year? And of your entire cargo volume, the second part of my question, how much really comes from the group company, JSW itself?
Okay. I'll just answer this. Our cargo volume, if I have to take like 3-4 years journey, if I have to take, it was close to about 45 million tons, thereafter 63 million tons, thereafter 93 million tons. FY23 was 93 million tons. And quarter one of this year, that is June 23, has been 25.42 million tons. So it's a continuous growth over there. Now, the total capacity of the company is about 158 million tons. And the utilization as on June, if I have to look at it, it is 63%. So utilization has been growing up ever since. Before 63%, as on March 23, it was 57%. Before that, it has been like 45%, 35%, and so on. So the utilization is going up. The cargo volume definitely is going up according to that. And the capacity is almost about 158 million ton as on March 23. Now, coming to your second part of the question, how much has been the group company? I'll just take you back on this 2004 when we started this company. This company essentially started to cater to the supply chain requirement needs of JSW Steel and Energy, because these are process-driven industries. So they would like to have a control on the supply chain. And that's where the genesis of this company started in 2004. Until 2018, we were handling only group cargo. That's why we were never into the radar of anywhere outside. 2018, we realized, okay, this is a good sector to be in. We have already invested in part of the assets. Why not we sweat the assets? We can cater to third-party customers. And that's where the investment intention and the direction for the third-party business catering started. 2018 onwards, most of our investment has been towards the development of the third-party business. In fact, in 2019, when we were doing 35 million ton of cargo, only 6% was outside the group. 2023, we ended with 93 million tons of cargo, out of which 33 million ton was outside the group. So the journey has been very fantastic on the third-party growth business. From a sheer 3 million ton volume, we did about 32 million ton volume as on March 23. And current quarter of June 23 quarter, we are 37% outside the group. So the good part for us is that, our group companies are growing extremely fast.
Right.
Be it JSW Steel or Energy or Cement. So their growth are extremely fast, and we have to keep a pace with that and make a room for third-party business also, which is a good problem to have. So we are blessed to have those companies as our group anchor customers. And
Mr. Maheshwari,
yeah.
Right, fair point, sir. I was looking at your FY22 numbers compared with FY23. The revenue has grown up sharply to about 3,372 crores versus 2,378 crores. But the PAT, profit after tax, has more than doubled to about 750 crores in FY23 from 330 crores. How has this happened? You are a infrastructure company that moves commodities. How come profit has more than doubled?
So basically, there are two factors into it because we have an FCNR loan as well as a bond in dollar bonds. There are about $400 million bonds out there. So this year onwards, we started doing the India's kind of entry. So there has been an exchange gain into that, so which has been accounted. On top of it, our interest cost has dropped dramatically, and also our utilization of the assets has gone up dramatically. Like from 45%, we have gone to 57%. So that increase of utilization definitely added to the top line as well as the bottom line both. On top of it, our interest loss going down as well as our India's entries has made it this way. So I think going forward also we will be able to maintain this kind of healthy PAT.
Okay. Just last.
Mr. Maheshwari, I'd like to focus on the debt part again. How much of FCNR are you paying back, and how much of reduced interest cost will you see in the coming quarters? Is the FCNR being replaced with another debt, or is it going off the balance sheet?
It is going off the balance sheet. It's about $110 million US, which will be repaid, which will be prepaid now. And the only debt sitting in the books after this IPO would be $400 million US bonds, which is at 4.95%, a bullet bond to be paid in FY29. So that will be the only debt remaining in the balance sheet post this IPO.
Okay, so last question from my side would be on the capacity. What is your current capacity at, and what do you foresee it growing to now? If I ask you about 1 or 2 years outlook, how would we see that growing to now?
So, but our current capacity is about 158 million tons across all the locations with the support or terminals. Going forward, if I had to look at it, it is difficult to put a number per se, but then I will just explain the opportunity what it is. Today, 50% of the port capacities of India is owned by Government of India, about 1,400 million ton.
Yeah.
And Government of India is very clear that they have done enough for the country by investing and operating this port for the last 6-7 decades. Now they would like to go into the landlord model, and they are inviting private players like us to mechanize and modernize those terminals. So every month we are seeing some opportunities coming up for bidding for mechanization and modernization of terminals. Very few players are there in India to take over that. And most of them we have seen regional players over there. We see this as a great opportunity. Imagine 1,400 million, 50% of the India's port capacity coming up. Even if part of it comes up for auctioning in coming years, it throws a huge opportunity for people like us who have a decent balance sheet, ambition to grow, and attitude is there for growing. So I think this throws a good opportunity. On top of it, we are going for brownfield expansions. We are also going for some kind of greenfield ports as well. So all put together, I think we have been able to maintain 22% CAGR for the last 20 years on the volume front. Now the base is very high. Our intention is to maintain that kind of volume growth or CAGR basis. So it depends upon how much terminal we win in the bidding. But given the track record, given the amount of terminal we still hold in India, I think I see a fairly good chance that we will be able to make it big in the coming years.
Right. Mr. Maheshwari, our last question to you. What will be the promoter stake after the IPO dilution?
So this is about 11% kind of dilution as of now. So about promoter and promoter group holding would be close to 85.5% post the IPO.
That essentially means that over the next 3 years, you will be again forced to dilute about 11% because that's the SEBI norm for listed companies where promoter stake cannot exceed 75. So there's more dilution in way.
As per regulatory norms, we'll have to dilute up to 75% minimum.
Right. With that, Mr. Maheshwari, we'd like to thank you And again, a very sincere and heartfelt congratulations to what has been one of the rare IPOs in Indian stock markets over the last 4 years, where the total IPO is something which will go
into the company.
to the company for expansion payment of debt.
True.
Thank you so much, sir. And
thank you, Mr. Bhatnagar.
we hope the best to you.
Thank you. Thanks for receiving us.
All right, and let's quickly move on to see how the markets are moving at this point in time. Absolutely flat, on the Nifty, it's 19,683. A slight downtick on the Sensex, 66,015 odd levels. But a lot of pockets are buzzing in trade. Eicher Motors remains the superhero of the day, 4% high in trade as the top gainer on the Nifty, top gainer on the F&O space as well. Metals, small caps, autos, oil and gas and PSU banks, the top movers on the markets. We'll continue to touch base and help you understand where exactly is the money moving into as far as the markets are concerned. So do stay tuned on for further Market Today shows through the course of this day as well. Many thanks, Shail, and many thanks to all our viewers for tuning in onto this special edition.
India, as my colleague from Guyana just said. In the 1990s, India was a country with a closed economy. 1990s, that's recent history. And look now where India has come. But India has not forgotten the other countries. This is not a country saying, bye-bye now, I am going